Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. The US gives Ukraine the green light to use long-range missiles to strike limited targets in Russia to defend itself from attacks from Moscow. The fight to be Donald Trump's Treasury Secretary spills out into the open as the president-elect moves to fill his cabinet. Plus, Chinese President Xi Jinping says he's ready to work with Donald Trump, but warns the incoming US administration not to cross Beijing's 4 red lines.
In the meantime, a quick check on these markets here. You're seeing green on the screen from futures, but not by a massive margin. Eurostoxx 50 futures higher by 0.2%. The FTSE 100 up by about the same margin. The currency picture is interesting. A 105 handle on euro dollar, but it's really the yen we've got our attention put on. 154 on dollar yen. The countdown to the opening trade starts right now.
Good morning. Monday morning. What's going to move markets this week? Is it going to be Nvidia numbers midweek? Is it going to be Trump's Treasury pick? Who is it going to be? We watch with a great deal of interest. Is it going to be the data, particularly the survey data? Did you see what happened with the New York data on the manufacturing front Friday? Really, really strong. We get more survey data this week. Or, Anna, could it be geopolitics?
Yeah, could it be geopolitics? A number of threads to the geopolitical horizon, I suppose, this morning. Everything that is happening in Ukraine right now, we have to see through the lens of the incoming US administration, don't we? This is all about positioning ahead of another Trump presidency. So we've seen Russia trying to demonstrate their strength over the weekend, a huge missile and drone strike. Many fatalities, of course, also targeting the energy infrastructure there. And then Biden deciding to allow long-range missiles to be used to strike inside Russia. That, again, is all about positioning Ukraine to try to demonstrate some strength heading into another Trump presidency.
It also is a reaction, you could argue, to the arrival of North Korean troops. Significant numbers of them into the Kursk region, potentially retaking that territory and removing that as a bargaining chip for the Ukrainians in terms of some sort of a deal that could be done as the Trump presidency arrives. Hard to tell. Do the markets move on this, though? This feels like, again, kind of something similar to what we've seen before. Is it the start of the end game? We don't know yet. I think if it is the start of the end game, that could be market moving, but we just don't know yet.
We don't know yet. And to Anna's point, how much of the Biden administration, this move on long-range missiles, really are in touch or are aligned with what President-elect Trump is really thinking. Of course, we know there have been a lot of calls around the world in terms of who's actually speaking to Vladimir Putin, who isn't. Olaf Scholz at the center of that controversy. We mentioned several things going on. We should also mention that, I believe on Friday, Russia temporarily limited the supply of enriched uranium to the United States. And that is where you actually saw the market move on that, because you can actually trade uranium. And that has a lot to do with nuclear energy and nuclear power.
Uranium is now part of the AI trade. It genuinely is. People are looking for how you're going to power the AI trade, and obviously the nuclear power industry could be front and centre in all of that. So you could sort of fold that into the Nvidia trade. We'll come back to that in just a moment. So Xi Jinping's basically got the same problem as the market's got. He can't figure out what the Trump tariff story is going to look like. So we can factor in all kinds of things to the Trump presidency, but we don't know yet is what that tariff policy is going to look like. So we had a nice little chat with Joe Biden. See ya. Nice to work with you. We can move on from here. And then he issues a really big, long statement. Within that statement are these 4 red lines, which are basically him communicating with the Trump administration.
Yes, absolutely. And you can take any 4 of them and you can envisage a situation where there might be conflict around that between the US and China. The one that stood out to me was don't contain China's rise. I mean, a lot of policy objectives are to contain each other's rise, it would seem right now. And so it doesn't take a huge amount of imagination to imagine that someone might overstep one of those lines at some point in the next 4 or 5 years.
The line for me that stood out in his statement at the APEC summit was small yards, high fences is not what a major country should pursue. And I feel like that is, to your point, a warning on those red lines. But how much can they really do about it? How much kind of firepower do they really have? And I don't mean that, of course, in war terms. I mean that in terms of retaliation.
That's about the chip sector, isn't it? That's about technology and the limiting of China's ability to progress when it comes to technology. And that takes us on to Nvidia this week, which is going to demonstrate so clearly the US's leads with a few caveats.
Yeah, absolutely. I mean, meanwhile, all the European leadership are trying to work out how they navigate this move from Xi Biden to Xi Trump. What is that going to look like? And we see Starmer is going to be holding his one-on-one. And we mention it because it's quite rare for a UK Prime Minister actually to sit down with a Chinese leader. It hasn't happened for a number of years.
Well, all the geopolitics, of course, an overhang on these markets, as well as are the Trump picks when it comes to Treasury Secretary. It feels like even in the backdrop of all this chaos, maybe there's one thing that moves markets this week, and it is who that Treasury pick is. And apparently, it's not even we're not narrowing it down. We're not getting any closer to a result.
The opposite.
Yeah, exactly. In fact, more contenders are being put up. Of course, it is this race between Howard Lutnick and Scott Bessent. The idea, and those are the front runners, but there's Mark Rowan, the Apollo CEO, seems to be one of the contenders as well. There's a question of what ambassadors, what senators could potentially be up for this role. But it comes down to this defining factor, which is who is aligned with the Trump tariff policy, who can be tough, and that's where Scott Bessent seems to be struggling a little bit.
I mean, and in terms of the amount the markets move, I mean, if it were, so Lighteyes are also being mentioned as well. I mean, he would be somebody that the market feels they have a sense of and may worry some in the market in terms of what this means for tariffs, because this is such an important role around tariffs, supervising the Treasury market, sanctions oversight. It's wide-ranging.
Lutnick apparently is slightly getting on the president's nerves, President-elect's nerves, some reporting suggesting that. Rowan's coming in because he is seen as being a big hitter on Wall Street. So there seems to be two competing sort of narratives here, one of which is Donald Trump wants the next Treasury Secretary to push through the tariff story. Yeah. But on the other hand, he also wants him to keep the stock market elevated. It's all hymns, by the way, which is interesting. Are those two things, do those two things fit together?
I think the context is important here. You mentioned the big weight. Stephen Mnuchin was a big weight on Wall Street as well. And one of the key pieces was that him and Trump kind of didn't get on very well because the economic policy, the Trump tariff policy, he tried to rein it in to do that very thing, keep the economy stable and keep the market stable. And Trump didn't like that.
If the barometer is the S&P, this is going to be really challenging.
Yes, and we were reminded over the weekend, weren't we, by some of the reporting that has been Trump's barometer in the past. We can expect over the next 4 years from January that he will mention that often, his performance as measured by the US stock market.
So we've all got this problem. She's got this problem. The market's got this problem. We don't know what that tariff policy is going to look like. Maybe we get an answer this week in the form of the Treasury Secretary. We'll find out. Let's talk about what we've got coming up on today's show. Chris Rhodes, president of ICE Futures Europe, is going to be joining us. Wolf von Rotberg, equity strategist at Sarasin, Safra, Sarasin, I'll get that the right way around, and Dan Draper, not Don Draper, Dan Draper, CEO of S&P Dow Jones Indices, is going to be joining us as well.
Some really interesting conversations ahead. Lots of data, lots of earnings, lots of events ahead as well. Here's what to watch out for this week. Of course, the G20 begins in Brazil today. We were just talking about some of the conversations that happened over the weekend. I know Guy's got his eye on Nvidia earnings, but I think I've got my eye on Walmart earnings, actually. That coming out on Tuesday. If we're talking about the American consumer, the resilience, even gas prices, it'll show up there as well. Then plenty of data. You've got PMI data in, well, really all three major regions, the EU, the UK, and the United States, in addition, of course, to data, UK CPI on Wednesday ahead of those Nvidia earnings.
And it's expected to be strong, which is going to be interesting in terms of what it does for expectations around the Bank of England. Nvidia, so massive contribution to the S&P this year, and the Dow, as Kriti now keeps pointing out. Very happy about that. Huge momentum factor. But there's all kinds of rumours around whether or not actually the earnings are going to deliver. The expectations are high, plus we've got these issues around Blackwell. Yeah,
really interesting, because I was talking to our colleague earlier on who was reminding me that, 25% of the gains on the S&P have come from Nvidia this year. If you take that to the Mag 7, it's 50%. So half the market really hanging on this very theme. But then we're working in a new theme here, aren't we, Trump and the Trump administration? And that's come more latterly. So the year-to-date story is sort of not all one story, maybe. And I wonder if it ends in the same way it started or if it has different dynamics.
I also wonder what the read-through is to Europe. It felt like the Nvidia, the AI trade, it was all kind of one big bundle. It showed up in ASML, it showed up in TSMC, it showed up in your big tech names. And it feels like now there's a little bit more nuance to the AI trade. What do you think?
It's broadening out. You could argue it is broadening out. You look at what is happening with infrastructure. Everybody's getting super excited about grid operators and telco companies and things like that. So the AI trade certainly is a little bit more diverse. But can it have the same impact?
We had a story about the banking sector making the most of that over the weekend, didn't we? And so, in a sense, it's broadening out there. It's broadening into the financial services sector. Very happy to make money out of the AI and data center trend. Yeah,
absolutely. But is it still as expensive to bet against Nvidia? And it feels like there's more caution. I've seen this picture before, right, with Microsoft. When you have an A+ kind of grade average every single time, suddenly the bar gets higher and higher to deliver. And Nvidia's met it so far.
It has, and that's kept the momentum going. If you look at the factors that have performed this year, momentum is the #1 factor by a country mile, and Nvidia's been absolutely pivotal to that. If you see some hiccups around Nvidia, does that momentum stall? And if it does stall, what happens to the wider market? We'll talk about that a little bit later on. What else do you need to know this morning? Let's run you through some of the other stories you need to focus on. Let's kind of continue with the Nvidia conversation. Tech-focused platform The Information is apparently reporting that Nvidia has asked suppliers to change the design of server racks for its new Blackwell unit due to overheating. Now, the report cites company employees, customers and suppliers. Nvidia has declined to comment on this story. We're going to watch that one carefully. Bloomberg has learnt that members of President-elect Donald Trump's transition team have told advisors they plan to make a framework for self-driving vehicles a transportation department priority. Currently, federal rules pose significant roadblocks for firms looking to deploy vehicles without steering wheels or foot pedals. And easing would directly, of course, benefit the likes of Tesla CEO and Trump mega donor Elon Musk. And Hezbollah has confirmed that its media chief, Mohammed Afif, was killed by an Israeli airstrike on central Beirut. It marks the latest in a string of targeted killings of top Hezbollah leaders, which have included the Secretary General of the organization, Hassan Nasrallah, in September. Lebanon's Ministry of Health also said that a second separate strike killed 2 people and injured 13 others, Anna.
Coming up on the programme, Germany's Green Party has picked the Economy Minister, Robert Habeck, to lead it into February's elections. This as support for Chancellor Olaf Scholz from his party weakens further. We will go live to Berlin for the latest on that story. Plus, President Biden arrives in Rio de Janeiro for the G20 summit, with Donald Trump looming large over the meeting of world leaders. We'll discuss what's at stake for the global economy. Up next, we'll be joined by Marie-Anne Allier, who's a fixed income fund manager at Carmignac Gestion. That conversation around the table shortly. If you have any questions for our guests, please do get involved in our conversations this Monday and every morning. IB plus BBTV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
I think we're going to be looking at rates coming down over the next year along the lines of what the dot plot said. So I still think we have a long way to go down with rates. There's some dispute about what is the neutral rate at which we're going to settle down. If there's disagreement about that we don't just charge right to it, that we slow the pace as we get toward it.
That was, of course, Chicago Fed President Austin Goolsbee speaking on Bloomberg Business Week, talking about where he sees rates going, more at the dovish end of the spectrum, I would argue, when it comes to the FOMC. So a 2-month slump has all but wiped out the Treasury market's gains for the year. Let's talk more about this. Valerie Teitel joining us.
A lot of that Treasury market pain does have to do with this theme, Guy, that the neutral rate could be a lot higher than we previously thought. We also heard from Lori Logan last week. She pointed to a model, Guy, that said that the upper bound for her neutral rate could be as high as 4.6%. If the neutral rate is that high, guess what we don't need? More Fed cuts. There have been a big doubt on this December decision from the Federal Reserve. We're now back to pricing in a 50-50 chance that they do cut in December, but the market is solidly thinking that one of the next 2 meetings is going to be a pause from the Federal Reserve. I want to touch on some interesting price action that was in the Treasury market on Friday. If we flip the board, we briefly touched 4.5% in the 10-year yield, but then we saw a big demand after we hit that yield level and saw a solid rally into Friday's close, very much posing us the question that there is demand for Treasuries out there at that 4.5 level. So keep an eye on that as we bounce from that. What there wasn't any dip buyers, though, on Friday's session was the equity market. We have now erased more than half of the S&P's gains since the election became clear that President Donald Trump was going to take the White House when it comes to January. We're now 3% off those all-time highs when it comes to those S&P futures. Maybe a lot of that jitterness, Guy, coming from the fact that we've yet to hear that Treasury Secretary pick, and maybe the longer time goes on, the more chance there is going to be that we get faced with a wild card pick from the Trump administration. Yeah.
Certainly, the lens is being widened when it comes to the possible people involved in that process. Bloomberg's Valerie Teitel, thank you very much indeed. Marie-Anne Allier, fixed income strategist, manager at Carmignac, joins us now to carry on the conversation. Good morning. Do you buy a US 10-year at 450?
For the moment, no, still not. It has nothing to do, or very few for the moment, with the Trump election, but the fact that the US economy is very, very resilient. And as you said, the Fed is no more committed to cut, a lot of times. You talk about neutral rates, and nobody knows where neutral rate is. But for sure, when you look at the U.S. economy and U.S. growth, you can't say that the U.S. Rates are very, very restrictive. So for the moment, we don't buy at 450.
Where would you buy?
I will say that I'm like the central banks. I'm data dependent and meeting by meeting approach. So I will be rates by rate approach. I will wait for having more clarity or where the U.S. growth will end, where the inflation will end, and how the Trump administration will proceed before, giving you a number. Just say that for the moment we don't buy.
Good morning to you, Marie-Anne. How many cuts are you expecting now from the Fed, and how will that impact the European Central Bank's ability to transmit the monetary policy that it wants to transmit?
We still expect the central bank, the Fed, to cut 25 basis points in December. After that, again, it will be a question of how the economy reacts to the new set of rates, and how the economy reacts to the Trump administration, and what the Trump administration will or won't do. So for the moment, we are buying 25 basis points in July, and probably at least 2 more in 2025, and more if it's needed, but it's not a done deal that they need to do so. For the European central banks, it's very, very complicated because we are in a total, difference to the US. Growth is not there. Inflation is coming down. And so probably it will push the central banks to do more than to do less, even if the Fed don't cut rates.
And Marie-Anne, will they be able to have that impact on bond markets that they want to have with their monetary policy, given what we might see, the resilience we might see in rates in the United States, that transatlantic influence, is that going to get in the way?
Yes, it's sure that European central banks has not, 100% influence on the bond market and on the real economy. At the end of the day, the fiscal policy will have as well. But again, I think that everything Trump will do to favor U.S., so meaning that growth will be in the U.S., company will manufacture in the U.S., the U.S. will be at the center of the new technology and so on. It will push the central banks to do more in the European country than to do less. Though it means that probably the difference between the U.S. and the euro and the Europe in terms of rates will increase. It will push a dollar higher, and that's probably the fact that dollar will be higher. It will be the way of making the equilibrium between U.S. and Europe more broad.
Marie-Anne, it's Kriti in London. The last time we spoke to you on the program, you said that the periphery of Europe looked quite strong, or much stronger than the core. And I'm curious how much of that has maybe changed in your view, given that some of the economic data from Spain, Italy, Portugal, Greece has slowed. It's still outperforming, but slowed relative to perhaps the last time we had you on the show. Walk us through your take on the periphery versus the core.
Well, we still like the periphery. We still like, as you said, the economic data are better in Spain, Portugal, Greece, and to a lesser extent Italy than it is in Germany or France. The political landscape is also much better in periphery than in Germany or in France at the moment. So we still like periphery. Still, the last time I spoke to you, probably spread didn't move a lot. It's stay at the same level, but it means that at least you have the spread and you gain the carry. So we are still very constructive and positive on periphery versus the core and the semi-core of Europe.
Well, let's talk about the core then, specifically in Germany. And you mentioned there, you alluded there to that federal election going into next year. What does a removal of the debt brake in Germany actually do to German yields? What does that look like?
It's not fair. First of all, the debt brake is not so easy to remove. You need 2/3 of the elected PMs to remove it. We still don't know exactly why the extreme left and the extreme right are regarding the debt brake. So it's not so easy to say that they will just push the debt brake. Furthermore, it's still not a very big part of the discussion in the electoral campaign. Debt brake is not something that is at the top of the electoral mind. So I don't think that for the moment debt brake has to do with the yield in Germany. It's just the fact that at the end of the day, the German growth is not okay. Probably the automotive, the industry in Germany is the most targeted by the Trump administration, and the fact that China is not there, and the fact that at the end of the day we don't know the new coalition, and the ECB is not buying anymore, and the ECB was buying Germany. So it's not debt brake for the moment. I think we are not still there.
Marianne, very quickly, if you don't mind, what does this all do to the concept of joint debt issuance and exposure to joint debt issuance? We're about to have a conversation in this program about the launch of EU bond futures. I'm just curious from your perspective as a portfolio manager what the appetite for that actually looks like.
Well, for the moment, we need to see how it evolves. I'm not pretty sure that it will work very easy. It must have been a demand for the market to have an EU future, but I'm curious to look how it evolves and if it will be helpful.
All right, Marianne Allier, fixed income fund manager over at Carmignac, giving us her take on a little bit of everything. We covered both sides of the Atlantic, but I think it's fascinating there that she's talking as well about that appetite for EU bonds and the idea that maybe there's a little bit of skepticism about whether or not you want that.
Yes, plenty of scepticism in Germany, and you wonder whether that changes with the new government. You kind of get the feeling maybe that Merz is not too different in his approach to this, maybe a little loosening, but
yeah, we'll see. I mean, yes, and some of the schemes that they have in place for debt issuance, as you pointed out to us before, they expire soon. Some of them live longer, but some of them expire soon. And forged in crisis. Is this a big enough crisis in Germany? I'm not sure. Yeah,
it's a really interesting one as well. And if not Germany, then where is my question? And she seems to be still quite strong on the periphery and what that actually looks like. Does actually then change some of the pictures around, again, that joint debt issuance and whether or not you want exposure to that. That's really what it comes down to. Coming up, we continue that conversation. Chris Rhodes will be joining the program, president of ICE Futures Europe, as it prepares to launch the very EU bond futures that a lot of the folks, as we just spoke to, are a little bit skeptical for. What does it do in this political context? Stay with us for that exclusive conversation next. This is Bloomberg.
Welcome back, everybody. 7:30 in London this Monday morning. Let's have a quick look at the market setup then as we approach the opening trade for London. Pretty flat across futures right now. European equity market futures look flat. US futures look a little more positive. Nasdaq futures up 0.5% at least. E-minis up at 0.1% or so. Moving on to bond markets, we were getting a nice description of everything that was happening last week and changing expectations around rates from Valerie a little earlier on. We do see yields coming down just a touch here in Europe and across the Treasury curve as well, but not enormous moves then, Kriti, this morning.
Of course, we've got our eye on all the political developments, specifically in France and Germany as well. That's likely to shake up the bond market as well. Let's take a little bit of a big picture approach, though. The EU has quickly become one of the biggest borrowers in global bond markets, expecting to raise 700 billion euros in common debt by 2026. But what happens after? Well, when the bonds expire and the EU's long-term status as a borrower remains in question, That's the concern behind Eurex, Europe's largest bond futures exchange, to postpone its launch of an EU bond futures contract. Now, here's what the German exchange operator said in a statement, quote, "Generally, we see growing market interest and support. There are, however, prerequisites to ensure the long-term success, liquidity, and sustainability of such a new futures product. It's all about the right timing." Its main competitor, on the other hand, ICE, is still moving forward with its launch of EU bond futures with a little bit of a twist. It's focusing on the longer end of the curve. It's not just a test of investor appetite for pan-European debt, but a move that could bring the EU one step closer to being included in global bond benchmarks. A crucial test, I might add. But before we move forward with that conversation, we should mention Bloomberg LP, the parent company of Bloomberg News, competes in some areas with Eurex and ICE in providing data and information to the financial industry. But again, we are, of course, very curious about what that launch looks like. So we've got the perfect guest for you. The president of ICE Futures Europe, Chris Rhodes, joins us around the table. All right, we've set up the conversation. We've talked a little bit about what you're trying to do. But walk us through why you, and by extension ICE, are so confident about this product launch when your biggest competitor just pulled out.
It's a good question. The way we see this as a product development challenge, the market needs to scale. To quote your numbers there, there's a rapid scaling of this market over the next 4 or 5 years. And it's our job as market infrastructure to bring the hedging tools needed to investors so that they can participate in that market. And if I draw your attention back to the European Commission bond survey in 2023, one of the key challenges was the secondary market and how those acting in the secondary market would interact with hedging tools such as futures contracts. And so therefore, at ICE, we've been looking at how do we solve that problem. And fortunately, our index provider, ICE Data Indices, part of the ICE group, have been working on this area also. So it's coming together with that group to provide a bond index future, which we think can kind of get through some of those challenges that our competitors cite.
Well, the key challenge is what happens after 2026. So let me ask you, what happens after 2026 to the product that you're offering when right now on the table there is no issuance from the EU?
Sure. There is uncertainty about issuance, but what we are pretty confident about is that the role of EU bonds will continue to play a role beyond 2026. If you look at the regeneration plans, next-gen bonds in Europe, they are serving a utility to the market to provide financing to Europe, particularly as they navigate the energy transition. So we believe that that those markets will continue to flourish. But importantly, those bonds will still be outstanding. And with a bond index future, particularly with an index methodology that can adapt for changing issuance, we think we can continue to have a derivative market that helps investors manage risk all the way to the end of their life and the maturity of those bonds.
Morning. Is this a sort of build it and they'll come type strategy, or a people coming to you and asking for this product, there is demand, they're asking for this particular product so they can do certain things like hedging? Kind of just walk me through the rationale for kind of how this product is going to be rolled out and what the end use ultimately is going to be.
I think this is about solving a chicken and egg problem.
It is.
The market needs to scale.
Yep.
It needs tools to hedge. That tool doesn't exist today, so ICE will be the first to market with this product. I also feel that as confidence grows, demand will grow. And part of confidence growing is about can you hedge your risk? And therefore, I think this is about closing that gap and bringing to market something that will deliver value now.
But if your customers come to you and said, we want this, or have you gone to your customers saying, do you want this?
A bit of both. We've surveyed the market to say, what's the appetite for this product? And from that survey, people have come back to us and said, actually, we would like to see a product, but we're not quite sure how to design that product. And that's the bit that we do.
Yep.
And back to where Kriti was asking you about the Eurex, the different decisions that you've both made around whether it looks like the right time for this product. Is this a bet on sort of more cohesive European politics, or can you go ahead with your strategy regardless? I
think regardless, but yes, I think part of the thesis here is more cooperation and more togetherness with regards to European politics. Again, if you see the world in a cheapest to deliver classical bond future way, I can see why Eurex would come up with their view. If you see it as actually this is about product development and creating an index and creating a derivative on that index, much like the equity market, that's how the equity market works today. I think you can see through those challenges and provide value to customers.
Talk to us about that value to a customer. So you said you've surveyed, you said there's some hesitance a little bit as well. What does the uptake look like in the next 2 months? We're going into the holiday season. You're launching right before it. What kind of trading volumes are you expecting?
We would expect like trading volumes like any product in the early phase. But this is about being ready for issuance over the next 2 to 3 years. And building that liquidity takes time. It takes a huge amount of marketing, a lot of engagement, a lot of discussions around index methodology. And so we're looking forward to partnering with our sister company, ICE Data Indices, to engage with customers and see what they need and make sure that our liquidity model stands up to the challenges of our investors who need the product.
So is this futures launch getting us one step closer to getting that index inclusion? Just earlier this year, it was rejected, not just by ICE, but MSCI as well. Is this getting us closer to that goal?
This is separate. This is about providing a tool to hedge exposure that there is today.
Yeah. As
part of that discussion, of course, there will be naturally a platform for investors to engage and to offer views. And, ICE Data Indices, a separate company, are looking at that engagement as well and saying whether or not the conditions are right to include. But that will be part of a process that will keep going in the future.
So one of the concerns around the upkeep or the uptake of an ICE future is that if Eurex, for example, does launch some similar product, there may be more industry veterans who gear towards that product simply as a function of the fact that they're the largest exchange here in Europe and they can offer German futures, other products as well. It makes the net positioning and margin kind of easier to navigate. What do you say to that? How does ICE make up for that advantage that Eurex has?
Well, ICE is the market leader in the European interest rate futures market through the short-term interest rate products. So Euribor Ester trades at ICE today. There's very strong relationships between the short end of the curve and the long end of the curve. This is an 8 to 13-year maturity product. And we think that offset and that ecosystem actually gives us a bit of an advantage. I think also of relevance to your question is Eurex have other things going on in bond futures. This is our way of sort of expressing our value proposition, bringing together our data and technology with futures markets and delivering that to customers to see if it solves a problem now. And actually, I think customers need a product now more than they need it in 12 months' time.
Is that having to do with the types of bonds you have chosen? I mean, you mentioned the 8 to 13 part of this as well, but there's a lot of investors right now in the markets who trade this stuff that are saying, why not just look at the next generation EU debt? It's a little bit of a longer time frame. It's more liquid. Why not use that?
Well, we wanted to construct an index that has a variety of bonds. It has 12 bonds. 68% of the index is made up of those next-gen bonds. The correlation between the EU, ICE EU bond index and those next-gen bonds is around 99% anyway. So we think that broadness of index composition is sufficient to help it scale in the initial period. If there's need for a more specific bond index, sure, we can look at that as well.
All right. We look forward to launch and seeing just how successful it is. Chris Rose, president of ICE Futures Europe, joining us around the table ahead of that December 9th launch on those EU bond futures. We thank him so much. Coming up on the program, going right back to the equity market, Enel raising its dividend and giving an upbeat profit projection for 2025. That and your other stocks to watch coming up next. This is Bloomberg.
Welcome back. This is the opening trade. 17 minutes until we start trade here in Europe for this Monday morning, and futures look, well, fairly uninspiring right now. We see a little bit of upside on US futures. Let's think about one of the big questions hanging over markets, though, right now, and that is some of the final nominations from President-elect Donald Trump. The fight over Donald Trump's chief economic policymaker is heating up as business leaders, billionaires and Wall Street executives are all pushing the president-elect to choose their preferred candidate to lead the Department of the Treasury. Kriti has an analysis of who's still in the running, or who's increasingly in the running then, Kriti.
Yeah, it feels like a neck-and-neck race is actually getting nowhere closer to clarity. But, Anna, before we go into some of these details about who's actually in play, we should talk about what the role actually entails. And a lot of that has to do with, of course, the $28 trillion Treasury market that, of course, we keep our very close eye eye on. Economic sanctions are going to be a big piece of that equation when it comes to Russia, members of the Chinese government, not to mention, of course, folks in the Middle East as well, a lot of which can have ripple effects into the two wars that are, of course, in this region alone. Tax policy is going to be a crucial one as well. Remember, one of the major campaign points that Donald Trump had made on the campaign trail was the idea that you can actually increase tariffs to help close the deficit and actually cut taxes. The idea here being the American consumer will benefit in two ways without actually impairing the deficit. So tax policy is crucial. The Treasury Secretary, whoever that may be, needs to be on the same page. And then, of course, I thought this was a little fun fact. They are also the fifth in line for presidential succession. In case the worst happens, they are in line to, of course, take power, again, if four of their predecessors aren't able to do so. That being said, let's talk about the contenders here, because this is where the fight gets really interesting. I'm going to start over here with Howard Lutnick. This seems to be one of the leading contenders right next to Scott Bassett. Two people with two very different backings. Elon Musk, we'll get to in a moment, has backed Howard Lutnick. But for so long, the major contender has been Scott Bassett. Now, over the weekend, the thought here is that maybe he might not be as tough on the tariff line as expected. And this matters simply because in the future, or in the past of a Trump administration, Steven Mnuchin had some real pushback from Trump when it comes to that tariff policy, saying it may not be that positive for the economy or for the market. So that pushback is what the Trump administration is going to be trying to address. And that's where Scott Bassett faces his biggest challenge, very quickly earning some endorsements for Howard Lutnick. Let's talk about some of the other contenders, though. Robert Lighthizer, the former U.S. Trade Representative, also very tough on tariff policy. Bill Hagerty, a senator from Tennessee, very vocal in Congress. And then, of course, maybe a Wall Street favorite, Mark Rowan, Apollo's CEO, and, of course, a major kind of player in Wall Street and the private equity markets, also all in the running. But when it comes to who has the lead, Anna, Guy, it comes right back to maybe a little bit of Elon Musk and who he's throwing his weight behind. Over the weekend, tweeting, my view, for what it's worth, is that Bassett is a business-as-usual choice, whereas Howard Lutnick will actually enact change. Anna, Guy, the idea here is loyalty. The idea here is tough on tariffs. We'll see who comes out on top.
Yeah, absolutely. I wonder if many Americans are starting to wonder who they elected to the White House with thinking about who exactly is behind these decisions. Kriti, let us carry on this conversation. Joining us now, our Markets Live executive editor, Mark Cudmore, to talk about the markets in 3 minutes. And Mark, we've been talking this morning about Treasury picks and lack of clarity as to who that is. I mean, some of them look quite, from a market perspective, look quite radical. Others look almost mainstream. Is this something that's going to move market expectations, or are we entirely focused on wider Trump policy and Fed expectations?
This is definitely moving markets at the moment. In fact, markets at the moment, the only thing they care about is everything Trump. That may slowly fade over time, but it's everything between who Trump's picks are, what that means for likely policy, and then, of course, there's the secondary step of actually analysing how that policy will interact with each other and with markets. But at the moment, every single headline around those picks are really important. And I thought Kriti's kind of outline of the situation was really, really important there and very good, because ultimately the Treasury pick's the one that's going to be really, really important. And the fact we're slightly more positive today than last week is last week people started to come to the belated realization that tariffs are not good news for US companies. And now this week, after some weekend reports that, hey, it may be a Treasury pick that is less aggressive on tariffs, that is making the market a little bit more confident today. But at the moment, they're very much on tenterhooks on who the next pick will be.
But this is the challenge, isn't it, Mark? The market wants somebody who's less tariff-like and will support, therefore, equity market valuations. But the Trump presidency may want completely the opposite. The market is betting on Trump being good for markets, but you wonder whether or not the reality of the Treasury pick will kind of lay bare the tension that exists within that. Can the market have its cake and eat it?
Probably not. And this is why, after being bullish on stocks all this year, I turned bearish last week precisely because of that dynamic, that the market has, in the early weeks going up to the election, since the election, focused on all the positives of Trump policies. And now they're suddenly realizing that, hey, some of these policies are very, very negative as well. Now, we still don't know what policy mix will be delivered, and I think that's really important here. But I think that we have been very singularly focused in the analysis out there. Ultimately, tariffs are bad for the global economy and not good for US stocks. And Trump was very aggressive that tariffs were going to be a key part of his presidency. And it's one of the areas of policy that he has the most power to enact. So that is becoming a little bit more negative. And that's why the Treasury pick, when it is decided, will make a big impact.
Of course, something that I imagine the bond market will trade very, very closely off of. Mark, in our last couple of seconds, Valerie Teitel, our markets correspondent, was talking about buying at 4.50 on the 10-year yield. A little bit of a bend to the bond market then, but what's the next line in the sand in terms of that yield?
I don't think there is a dramatic line in the sand right now. I think we kind of bounce around in the 10-year range. As I kind of talked about last week, I think more of the volatility in the bond market will be at the front end of the moment, whether December is in play, what the path of the Fed is after that. I think the really exciting movements for 10-year will be something that we pay 6 months from now, when you can really get a trending move in 10-year yields. Until we get clarity on Trump policy, it won't happen.
Certainly something we're keeping a close eye on. Bloomberg's Markets Live executive editor Mark Cudmore joining us this morning. Get more up-to-date analysis from him and the team. Just type in MLIV Go on your Bloomberg terminal. Let's go from the macro to the micro. Get our stocks to watch with Joe Easton. Joe.
Morning, Kriti. So Italy's Del Vecchio family is potentially looking to offload their stake in UniCredit, according to local Italian press at the weekend. They currently hold around 2.7% of the lender. We can see those shares have done pretty well over the past 3 months, given speculation around this takeover of Commerzbank, which very much remains on investors' radar. But bear in mind, the Del Vecchios were actually part of the investor group that bought a stake in Monte Paschi last week, when we saw the Italian government changing their holdings in the lender there. So a lot going on in terms of the Italian banking sector at the moment. We can see that spike up in Monte Paschi last week. Italian banking M&A very much on the radar at the moment. Then in terms of the power sector, staying in Italy, we've got numbers from Enel. They are raising their profit target for the year to as much as 6.9 billion euros. Also bumping up their dividends as well, rewarding some of their investors. However, there was also a bit of M&A in this, because one of their businesses, Endesa, which is separately listed, is buying the hydro business of Acciona over in Spain. That's worth around €1 billion, so a decent-sized deal. Those three are all separately listed. The one that really needs a boost is Acciona over in Madrid, down almost 30%. A lot of weakness in their wind business. Potentially, this is going to be a positive for that one today. Then over in luxury, there's a bit of a change in leadership, potentially, according to the Bloomberg retail team over at Kering, their unit. Yves Saint Laurent could have a new boss. The leader of Balenciaga potentially coming in to Yves Saint Laurent, changing his role there. He's led Balenciaga since 2016. This is Cédric Charbit. Now, Yves Saint Laurent is the second largest brand in the whole group, and is potentially part of the business that needs to be turned around alongside Gucci. We can see on the stock that is down sharply over the past few years, almost 70% on a 3-year in terms of the Kering price. We know about the issues at Gucci, but also Yves Saint Laurent. Potentially that could be positive with maybe a new leader there. Then in your ratings, we've got a whole delays over in the Dutch grocery sector. That one is a buy today over at HSBC. And back in Italy, Buzzy Chems is downgraded to hold at Berenberg, and Generali has a street high price target following their earnings last week.
Joe, thank you. Our equities reporter Joe Easton with Stocks in Focus. We will certainly, Guy, keep an eye on what's going on with the mining sector as well. It was the best performing sector in Friday's session, which is one reason to mention it. But then I also know iron ore prices up by 2.6% through the Asia session, so something we could see have an influence on the European trading day.
A little bit of China influence coming into the market maybe this morning. Your aluminium price is also rising, aluminum for Chrissy's purposes.
Thanks, I didn't know what you were talking about.
Just to double check that you've got that one. Alex Steele, you should take that very seriously. So it looks like the miners could be up. So it'll be interesting to see how the FTSE trades in relation to the rest of the European markets this morning. It feels like we're in a wait-and-see mode this Monday morning, though. There doesn't seem to be an obvious catalyst.
Well, only this Monday morning. I was really taken by what Mark just said, actually. Mark Cudmore saying for 6 months we don't get clarity on Trump trades. No. So therefore, for 6 months, you know, can you take a really firm view on just how high rates are going to go?
Well, this is going to be an exciting 6 months on the program, I'm sure. But you mentioned the miners piece as well. I want to throw in the fact that miners and oil stocks haven't been trading in line with each other. One has been a Chinese story, and the other has been kind of more exposed to the Middle East, and arguably the U.S. as well. And I'm curious of that simply because that entire commodity complex has historically traded with the dollar. And right now, maybe that's where we're seeing a little bit of dispersion. Yeah, and I find the gasoline. Looking at the gasoline price is probably the most interesting. If you think about the inflation narrative that's coming out of the States at the moment, a lot of people are questioning what is going to go on with inflation going forward from here. That gasoline story, how much of an offset is it to what else we're seeing in the services sector at the moment? And I think you're going to get some clarity, hopefully. Have you ever pumped a tank of gas in the States?
It's quite cheap.
Yeah. I was shocked when I moved here just how expensive gas is here. Gasoline,
yes. Welcome
to be
the
clear.
tax.
Yeah. It's all tax.
And for us, it induces panic while you wait to see whether your credit card is going to work in a particular machine you selected. That's my tourist experience.
Do you do it yourself here, or do you have someone do it for you? This is a point of contention in the States.
How doesn't drive a car here.
Not here. Does anyone drive a car here? But this is a point of contention in the States. In New Jersey, they have an attendant that comes to do it for you. And in Texas, you do it yourself.
There you go. Different culture.
News you can use.
News you can use.
Try living in the Gulf. That's where it's really cheap.
This week, I suppose we should give a quick mention before we start trading this morning that we are going to be focused a lot on Nvidia and the AI story. That is going to be such a feature at the middle of the week, isn't it? So being in limbo because of Trump, being in limbo because of a whole host of things, one of them is waiting to find the next leg on the AI story, perhaps. That is going to be a part of the narrative, at least. European equity market futures then flat to negative this morning. You can see on your screen right now, US futures look a little brighter, but not much. Nasdaq futures up 0.5%. We'll be back with the opening trade next. This is Bloomberg.
Monday morning, good morning. Nothing's really happening this morning, so let's talk about Friday. Everybody's going to be cross with me for saying that, but I think it's true. The European market rolled off as we came into the end of the session. The reason for that, the US was selling off. Then the US basically did nothing in the afternoon, and that's kind of where we left it. So to be honest, I'm not sure from a kind of pricing in point of view, Kriti, there is much to do. And in fact, I'm not sure there's much of a catalyst this morning to take us that much further forward.
Come on, Guy. Eurostoxx 50 futures down 0.1%. It's very exciting in the world of futures right now. Some slight outperformance, however, in German futures. Higher by, again, we'll call it 0.1%. But I'm sure Anna can find something a little bit more exciting to talk about when it comes to individual stocks.
You've left me with all the heavy lifting. Let's go for it, shall we? Let's have a look at some of these individual names. UniCredit over in the banking sector. Well, there's a business that's never dull. The billionaire Del Vecchio family is evaluating options for its stake in UniCredit. This according to local media reports. So we'll certainly keep an eye on that one and see if we get any further news there after they invested in BMPS. So we'll certainly watch that one. We're also focused on Enel, sticking with Italy, it seems, at least for the first couple. Enel in the energy space, they've raised their dividend. They've also given us a new target for profitability for 2025. The company is nearing the end of a debt restructuring plan, with net debt expected to fall below sector average levels by year end. So a focus on the balance sheet management for that business. So there's some news there. We're also focused on Kering, over to the French luxury space, and we've got some news flow to be expected this week around Kering and who runs what. So Kering is considering naming Balenciaga's CEO Cédric Charbit as the CEO of Yves Saint Laurent, as we were hearing from Joe. So we'll watch for news on that front, Guy.
The Del Vecchio to sell their UniCredit stake to Commerzbank. Just an idea. OK, here we go. Market open. We're not expecting very much, at least at an index level. Looks like we're going to drift sideways until we get a new catalyst. When does that catalyst come? What is that new catalyst? We will wait and see, but it feels like it's going to come midweek rather than early in the week. FTSE 100 is absolutely flat out of the gate this morning. We'll see what the miners do. We've mentioned that sector already. The stock 600 is, as Kriti says, down by 0.1%. The FTSE 100 is outperforming by being up 0.1% so far this morning. Elsewhere, we're waiting to get a little bit of action. The IBEX is not providing it. It is up by 0.1%. I'm rounding higher, as is the CAC Geron this morning. These are huge moves, Kriti. Below the surface, I'm sure there's some significant rotation.
It's riveting. You're always leaving me with the riveting stuff, clearly. But from the miners' perspective, I think we've got that one right ahead of the opening trades here. Rio Tinto, for example, is your biggest index contributor to the upside when it comes to the FTSE 100. You're seeing the same with Glencore, Anglo American. Anna, this idea that miners are actually leading the way higher on the FTSE 100, as marginal as it may be, is certainly one to keep an eye on. When it comes to the stock 600, though, a little bit of a different picture.
Right, yeah. So Basic Resources is the best performing sector, up by 0.7%. That iron ore price drifting a little bit higher, or more than drifting, up by more than 2.5% in the Singapore session. So Anglo American, Glencore, Rio Tinto, all going a little bit higher, perhaps on that or related themes. Energy prices, interesting. We're moving a little higher on the oil price, up around 0.5% on Brent at 71.36. But energy stocks are moving lower, down by 0.5%, so not perhaps much to connect the two this morning. Utilities not doing too bad, autos and parts not doing too bad. Banks is one of the worst performing sectors, along with media, but we're not moving all that far. Very quickly this morning would be the main headline. The stock 600 up by 0.1% this morning.
I'm dipping into the FTSE 250 to try and find some action. It is up by 0.2%. In terms of where we're seeing some downside, Dr. Martin, the lead loser in that space this morning. I draw no conclusions as to what is happening there. The market's basically just looking for a catalyst. It's hard to tell at this point what it is going to be. Mark Cudmore certainly was flagging the fact that it's going to likely be the Treasury market, the Treasury Secretary that is going to define ultimately how markets move at this point. We're really waiting to see what that appointment is going to do to markets. But there are other things going on. The FCC I thought was really interesting in terms of that narrative as well when it comes to how some of the big tech stocks are going to trade. What happens in terms of the data? Did you see the Empire manufacturing data on Friday? Super strong. Questions being asked about whether inflation is re-accelerating. There's a lot of survey data out this week of the United States. Here in Europe, are we going to see UK inflation providing a catalyst? It kind of feels like we know what the answer is going to be. Slightly stickier inflation coming our way.
And perhaps justifying then this cautious approach to rate cutting. That seems to be the latest mantra we've had coming through from the Bank of England, certainly post the budget and people's shifting expectations around inflation impact that budget might have. So we'll certainly focus in on that inflation data in the middle of the week.
Yeah, it certainly is going to have a ripple effect. And I should just mention very, very quickly, we are actually seeing a little bit of divergence when it comes to the pharmaceutical stocks and the healthcare stocks as well. Novo Nordisk on one hand, then you have your AstraZeneca, Novartis on the other. So an interesting trade, maybe a couple of single stock stories in that sector.
We're struggling. We're struggling with single stock stories. We're struggling with indexes. We're going to get some clarity, I think, probably later on this week. Valerie is joining us around the table. Let's talk to her. She's just said
Rescue us.
There was mixed signals as to whether or not I should talk to you. I always want to talk to you. Of course I do. In terms of the catalyst, what could they be? In terms of order of magnitude, how should we think about sequencing what we are seeing this week? You've got a Treasury Secretary selection. Kind of how big is that going to be? You're going to see potentially a lot of Fed speak this week if they get behind Powell. How big an effect will that be? What impact is the survey data going to have? I'm trying to sequence and get a kind of symmetry of impact here. I understand the symmetry of how the impact is going to work.
Yeah, no, it's definitely a good question. There's a few catalysts on the horizon, one of which being the Treasury Secretary pick, which we really don't know when we're going to get. We hope soon, hope to have some clarity on that. But I really think that the big kicker is going to be these Nvidia results that we get on Wednesday night.
How is that possible?
Just how big, Nvidia is when it comes to the S&P 500. It's 25% of the year's gains. A lot of optimism at the moment around the Nvidia results, given their two main suppliers were a bit more optimistic in their own results. So maybe we can get a bit of a boost to the equity market after that. But I think then it's all really down to the Treasury Secretary pick, right? Is he going to go for a pick that is going to, I guess, pose some stability to this market? Because it's not just that the Treasury Secretary will be overseeing the Treasury market. They'll be basically conveying a very private reason to Trump, essentially trying to say to him a yes or no on his spending plans, right? Like they will be trying to tell him this kind of spending and this kind of Treasury issuance could really cause some instability. And that's what the market is going to take from this Treasury Secretary pick more than anything.
Yeah, and there's such a range of people we could be given here. You know, the end person, it's so unsettled, isn't it? Because some of them seem to be, firebrands and really with quite relative to Wall Street, maybe quite extreme views. And then others almost, darlings of Wall Street. So, could be a range of outcomes here. Still, let me focus in on that Nvidia story again, Valerie, because I know at the end of the last, a couple of hours ago of programming, in fact, Tom McKenzie was going through the day moves of Nvidia on and what that looks like in relation to the S&P. And what's interesting is for a stock that has so much influence and so much impact at the larger scale, so, it's a quarter of S&P gains, for example, this year, actually on the day, it doesn't necessarily set the tone for the S&P, which I think is a really weird sort of contrast.
Yeah, it hasn't always correlated with broader gains on that day. But look, Anna, the outlook for the chip market is going to drive very much where the equity market goes from here. Not just Nvidia, but the broader Mag 7 stocks and what they mean in terms of AI demand, chip demand. I think it's still going to be a very important way forward. Maybe not on the day, because, hey, we could get the Treasury Secretary pick on the same kind of day. And the market reaction muddied from there. But it's going to be a key highlight for the markets the Wednesday night after the bell Nvidia earnings.
Can I provide a counter to that, which you actually pointed out to me, that Walmart earnings are coming a day before Nvidia? Then you've got, I think, John Deere, you said as well. I mean, these to me are kind of bigger bellwethers for the U.S. specifically than maybe Nvidia is from kind of an economic data perspective. Do you think that could change the game, or at least maybe the narrative around that U.S. consumer story?
Well, Walmart being the biggest employer of Americans nationwide. Not only that, we also get Lowe's and Target, and as you mentioned, John Deere. So a good bellwether perhaps on the U.S. consumer. But a lot of this goes to the fact that survey data we've gotten recently has been a bit more positive. You know, look at the small business optimism surveys that we got showing that there is a bit more of a rosier outlook now that we have the new Trump administration to take the White House in January. So perhaps we see this kind of optimism also when it comes to those consumer discretionary earnings we get this week. You know, my favorite stat of last time was that last time Trump took the White House in 2016, we saw the biggest 3 months gain in small business optimism that we had seen in 40 years. So a lot of this positivity for business that could drive. Maybe we'll see that in the PMIs on Friday, Guy. We get global PMIs on Friday. Perhaps they show more positive impulse in the U.S. and a more negative impulse in Europe because of the overhang of tariffs.
We've got a whole bunch of them this week. There's a whole load of survey data out that we need to watch this week. Kriti, though, to your point about kind of the John Deere bellwether, I think it's interesting. If you think about kind of where money is being spent right now, it is in data centers. It's that kind of core infrastructure stuff that people are talking about. That's the kind of, if you think about Nvidia as a bellwether for the US economy, this is where the spending's going. It's kind of the supply chain story, I think, is really significant in terms of the way people are spending money and employing people around the U.S.
It's a supply chain story. It's also a Trump pick story. And I think that one's, we could talk about it in the Treasury Secretary piece. But in the last 48 hours or so, we also heard about the new Energy Secretary, the new FCC chairman. That all shows up in the agricultural sector. That all shows up in the energy sector. And John Deere may have some comments around that as well.
Let's just get some breaking news lines coming through around HSBC, shall we? Because this just dropping on the Bloomberg terminal. We're getting a red headline that says that HSBC is going to be asking hundreds of senior managers to reapply for their jobs. They're likely to announce job cuts in the coming weeks. I think we saw some of that coming. Of course, new management over at the business under the hands now of George El-Hederi. Excuse me. Specifically, what they're talking about here is those staff who've come from the commercial banking division having to go up against people from global banking and markets as they combine these two parts of the business into a combined CIB division, and so as a result having to reapply for those jobs.
I also heard, this is by no means in any way connected, that HSBC is slightly concerned that its new headquarters, which they're building just down over the road or revamping just down over the road, is already going to be too small. So as they move out from Canary Wharf back into the City of London, that the headquarters are going to be too small. But it's interesting that this is happening at a time when competition in the banking space for talent remains absolutely fierce. But it's interesting how this story is progressing in a kind of slightly city-like way as they combine divisions and ask everybody to compete for their jobs. Core 6 looks a little bit like this. This is how we are trading this morning. It is a quiet morning, to say the least, when it comes to the stock story here in Europe, and the Core 6 reflecting that to a certain extent. What I think is interesting, though, to Kriti's point, is what's happening in the healthcare space at the moment. But look at ASML and Schneider, both two AI trades, both trading softer this morning in a week that's likely, as Valerie says, that's going to be dominated by Nvidia. Let's get some other stock-specific stories. Here's Joe Easton.
So the best performing stock today actually in Europe is Melrose. Now this one had a trading update just before the open. Now they've reiterated their guidance. This is an engineering firm in the aerospace sector. They recently had some concerns around cash flow in their partnership business with other engine makers. So it looks like they're reassuring investors today and spurring a decent gain for that one. As I say, the best performer on the SXXP this morning. Then in terms of UniCredit, we were waiting for a potentially delayed price on that one at the open, but there it is, down 2%. Now, remember, reports over in Italy at the weekend that the Del Vecchio billionaire family could be looking to offload their 2.7% stake following them buying a stake in Monte Paschi, rejigging their investments in Italian banking, according to those reports, potentially on that one. Then staying in Italy, we've got the Enel numbers, that increased buyback, and also that deal for the hydro business of Acciona over in Spain. We're seeing Acciona rising a little bit up in Madrid, up around 3% at the moment. Actually, Enel's numbers actually seeing a little bit of a decline in that one, despite that higher dividend, potentially a little bit of a surprise there. But Acciona getting a boost in the Spanish market today. Then in terms of Kering, potentially we will have a new leader at Yves Saint Laurent. That's according to a Bloomberg exclusive. A little bit bit of a gain in that one, not too much of a move. But remember, that is the second largest unit of that company behind Gucci, which needs the big turnaround for that stock. Then in terms of the home builders, we had some numbers from Rightmove overnight. Now, house prices did decline by more than 1% in November. Some people pointing to potentially weakness following the budget and jitters around the UK policy in terms of housing as well. So we were seeing a little bit of a dip in those. We have not got a price on those, but take my word for it, they are slipping this morning. Finally, in your ratings, we've got ASR Netherlands. This is in insurance. Gets a buy over at UBS following a massive share buyback recently at that company, returning more cash to shareholders. And then the other one over in Amsterdam is Ahold Delhaize, the grocer. Another buy, this one over at HSBC. That's following cost-cutting in their latest report. Both of those stocks rising today in Amsterdam.
OK, thanks so much, Joe. Joe Easton from our equities team with a look at some of the stocks that are on the move. 12 minutes into our European session then. And the broad picture for European stocks is that we are a little bit weaker, down 0.1% on the Stoxx 600. The FTSE and the DAX outperformed slightly. The CAC 40 down 0.1%. When we come back, we'll talk about equity markets, European equity markets, where they go from here. What's at stake with the Trump presidency? More on that shortly. This is Bloomberg.
We are 60 minutes into the session, 60 minutes past the opening trade. Equity markets are looking for a catalyst this morning. Certainly, let's talk about what that catalyst could be. Wolfgang Rotberg, equity strategist, equity strategist Jay Safra Sarasin, joining us out of Zurich. What are you looking for this week? At the moment, we are waiting, we are sitting on our hands, we are looking for a catalyst. What do you think that catalyst could be?
Well, I guess I like 4 points probably, which are relevant this week. We have some data on the inflation side in the US. We have the PCE. We have PMI data towards the end of the week, which will definitely be relevant. We've obviously seen quite a resurgence in the numbers on the ISM, for example, in the US over the past months. If this is being confirmed, the US cycle basically keeps pushing higher. European numbers obviously will be important here as well. We have seen macro surprises turning positive again in the euro area. All these factors are relevant. And then on the political side, confirmation of a Treasury Secretary name, of a proposal by the President, that's something which could have an impact here, given differing positions, in particular on trade, which the market may be pricing for. And then we also have Nvidia earnings, obviously, this week, which is always a market-relevant earnings number, where we wouldn't expect much of a surprise, to be honest, saying basically they should continue to guide fairly positively, tell us that there's more demand than supply, but definitely a data point the market will be looking out for.
Back end of last week, equity markets start to fade the Trump move. Does anything that you've just laid out stop the market continuing doing that?
Well, I think if we get some more positive numbers on the macro side, obviously that would help, and in particular on the PCE number, we have seen the CPI number coming in above expectations. Same goes for the PPI, in particular on the core. If that were to be reversed, let's say on the PCE, then the market would receive some assurance, let's say, that inflation is not coming back immediately, saying basically it's all about the December rate cut. We have heard from Chairman Powell, obviously, that he's now putting it into the balance, saying it's not entirely assured that this rate cut will happen, but the PCE number could here, shift the either way. So definitely something which will be relevant. And I think if we just look at the market moves over the past few weeks, rates have become increasingly relevant, with the equity market being a bit scared, I think, that rates may start to overshoot again to the upside and weigh on valuations, which are quite rich in the US in particular.
OK, well, that's interesting. Let me think about other impact that we could see stateside, and that is around tariffs. You mentioned in your notes that it's difficult to quantify, of course, what the tariffs are going to look like, but they could be more moderate than 2018. I'm interested in how you get to that conclusion, given the promises from the incoming Trump administration on tariffs have been greater in scale than we saw back in 2018. So how do you manage to take that sort of slightly more positive, optimistic, perhaps, view?
Yeah. Number one, rerouting of trade routes or supply chains, let's say. We know, for example, that the imports out of China into the US, they've fallen from around 22% of US imports to around 14% since the let's say the 2017-2018 era. Which just goes to show that companies have been eager to relocate, to go into territories which are more, let's say, which the US is more tariff friendly to, which would just limit the impact of higher tariffs on US earnings here. And we know a lot of these imports are obviously US companies produce products in China. Going into the US. That's definitely one factor. Other factor is we know the Trump rhetoric is typically, the bar very high and then in slightly below that. We're talking about the Treasury Secretary. We've heard that Scott Bessent is one of the favorites here. I mean, he has written an op-ed saying that this is probably the maximum position which has been put out. So saying, at the end of the day, it really matters, in terms of like what we're actually getting. And the third point is on the general tariffs globally. This is something which can probably not be easily justified with or on national security. The president have to go through
Wolf,
Congress to.
I'm going to have to jump in. Wolf, thank you very much. Thank you for your thoughts. I'm so sorry, we're having some problems with the camera, so I'll just jump in there. But thank you for your thoughts. Worth sticking with the conversation for as long as we could. Wolfgang Rotberg, equity strategist at Safra Sarasin, thank you very much for that. Let's pivot from one area of policy that President-elect Trump will have a big say on and set the tone for to another. The US has lifted restrictions on Ukraine's use of some Western-made long-range weapons to strike military targets within Russia. Russian forces launched a 120-missile barrage, meanwhile, at Ukraine over the weekend, striking energy infrastructure. Bloomberg's Bill Farries joins us now with more. Bill, let's talk about the lifting of these restrictions, then, by the current US administration. What could that mean, while we all wait, of course, for a new president to arrive in the White House? What could that mean for the conflict?
Well, it's a request that Ukraine has been making for months, and I think there's going to be a lot of questions about why the U.S. took so long to respond and give them approval to use these longer-range missile systems called ATACMS to launch strikes deeper within Russian territory. Those systems have been inside Ukraine and used by Ukraine's military since last year, but they were only authorized to really target some of those border regions that Russia has been occupying since the early days of the war. They haven't been able to use them to go deeper into Russia. So this is a game changer in that sense, but whether it will really change the course of the conflict at this point, particularly with Donald Trump expected to be inaugurated 9 weeks from today, is a big question out there. But it does give Ukraine some new tools to try to at least stave off Russia's advances and try to secure some of the territory that Ukraine has grabbed from Russia over the course of the year.
Bill, there seems to be a narrative increasingly that I'm hearing increasingly that Europeans are pretty much on board with the idea that we need to end the war and end the war reasonably quickly. Is that changing the narrative when it comes to communicating with Zelensky?
Well, I think that's absolutely the case. I mean, we're seeing that, German Chancellor Olaf Scholz spoke with Vladimir Putin. That was the first communication at that level between Putin and the West in about 2 years. We know that we expect that today Turkish President Erdogan in South America for the G20 is going to put forward his proposal that would essentially call for a truce in the Russia-Ukraine war, but leave kind of the battle lines where they are for the time being. So there is this increased momentum, and I think a couple factors are playing into that. One, of course, is Donald Trump's inauguration in 9 weeks. And the other, the fact that this war is getting even more international. We have about 10,000 North Korean troops preparing to join Russian troops in battle, and some intelligence reports suggesting that North Korea could be prepared to send as many as 100,000 troops over time into this conflict if it drags on. So I think that is raising a lot of alarms and making a lot of leaders think, let's find a way to wind this down over the coming year and not have it continue on indefinitely.
Well, great stuff. Thanks very much indeed for the updates on what is happening here when it comes to Ukraine. So EU foreign ministers are actually arriving in Brussels right now, looking to discuss that situation in Ukraine. They're, of course, going to discuss what's happening in the Middle East. I suspect that the Donald Trump presidency is going to be a fairly significant factor here as well. The Spaniard, Josep Borrell, who is, of course, the High Representative for Foreign Affairs for the EU, is currently speaking. Let's take a quick listen to what he has to say. Or not. It does seem as if we are maybe struggling with a little audio. There it is. Let's take a listen.
Taking days and weeks and months to reach agreements in order to act. So my last call to my colleagues will be more united, take decisions quicker, defense don't wait for you. Russia is not stopping the war because you are thinking about it. Every time we took decisions in order to support Ukraine, it took too long. Every time it was a hesitation. Should we do? Should we not do? The war continues raging. Ukrainian people need more support. We have to provide this support, stop discussing and start acting quicker. I am sorry that maybe I will not be able to make my last proposal about the European peace facility, but I still have a hope. Then the situation in the Middle East is, there is no more words. I exhausted the words to explain what's happening in the Middle East. The Secretary General, the Under-Secretary General...
Speaking in Brussels, we're also getting commentary on the economic front from another Spaniard, Kriti, de Guindos.
We are. We're getting some headlines there. The ECB's de Guindos talking about basically what we've been talking about. The risks have shifted from inflation to growth, and a lot of this has to do with trade tensions that could potentially be rising. This is a comment that we've heard not only from our markets guests, but of course from world leaders as they kind of recalibrate after the U.S. election. It's going to be a lot that comes out, of course, out of that speech in Frankfurt. That's where he's making those comments. As we get more headlines out of Brussels, out of Frankfurt, from the ECB and the EU, we will, of course, keep you apprised. Markets mixed at the moment. Stick with us. This is Bloomberg.
Welcome back to the opening trade, 8:30 here in London this Monday morning. Fairly quiet in terms of substantial news flow, but there's a lot to look ahead to. European equity markets, though, managing to turn something around into eking out some positive territory. The Italian market really does underperform today. The banking sector, a little negative there. But elsewhere, we see some flat to positive performance. Nasdaq futures, interestingly enough, up a little more than they were, up by 0.7% now. Let's think about tech, because Nvidia is reporting this week. It's been a massive driver of US stock gains this year. How will the momentum in the tech sector fare into the year end and beyond? With us now for an exclusive interview, Dan Draper, CEO of S&P Dow Jones Indices. Dan, very good to have you with us. And we thought we'd start our conversation thinking about what tech means for markets broadly at this point, because Nvidia was so much the story of the first half of the year. Then we saw some broadening, a lot of talk about broadening. Then we add into that some Trump themes and things get a little more complicated perhaps. But what do we make of the momentum trade behind big tech at this point?
Oh, I mean, momentum has been a key factor. Momentum is up 44%, year to date, versus just under 25%, for the S&P 500. Momentum is quite powerful. If you think about when you have, we've set 51 all-time highs, for example, in the S&P 500 this year. Whenever you set an all-time high, there's a 92% chance the next month you're going to set another one, and even a 99% that at some point in the future you set. So momentum is quite powerful moving forward. But what's interesting, as you mentioned, if you think about those U.S. Employment numbers back in July, the momentum trade continues, but we've seen some real dispersion. So underneath kind of the swan who's sailing at the top, there's a lot of furious paddling down below. So you've seen since that mid-July employment number, you've seen small cap, so S&P 600, mid cap 400, and even things very simple like the S&P equal weighted, all relatively outperforming.
Yeah.
So you're now starting to see, in the Trump trade you mentioned, more dispersion.
Yes, I was going to say, so there was a lot of talk over the summer about whether we'd see the trade broadening out,
yes.
and then, enter another Trump presidency or the prospect of it, and suddenly small caps are really on fire. So how much more of this broadening out trend is there to go, or is that all TBC, depending on what we get from the White House?
Well, it's interesting. I think if you look at sectors specifically, so again, I'll pick the S&P 500, historically, dispersion among sectors is about 20, or I should say accounts for about 22% of the return, on it. However, since, post-Second World War, dispersion in the month of November of an election year goes up to about 75%. So you see, if you will, the bets the market's making in the income administration. So we're seeing it, but you're also seeing a little bit of a tapering now several trading days later, and a bit more mean reversion.
Yeah.
Can the index continue to go up if the market broadens out?
Well, we're currently seeing it is now. I mean, you're just taking different types of leadership, moving.
Yep.
I think what we're seeing, though, is seems the backdrop is still monetary policy. You've talked about it all morning.
Right.
But if we still have this, on margin, lower interest rate at some stage in the future, you do have, along with another good earnings season coming out of the U.S., for example, you still have some tailwinds that can support the broader market. But the leadership sector basis could be changing.
But so if the Mag 7 go down,
yeah,
are we confident that the market can still go up? That is just, you talked about momentum, you talked about the impact that they've had.
Yeah.
If they roll over, is it a zero-sum game that the rest of the market kind of produces a higher index if the rest of the market rises?
Well, I'm not going to predict the future, but what I can say is since mid-July, that's exactly what we've seen.
Yeah.
Right? We've been able to see, the Magnificent Seven, or even, the top 10 stocks, for example, in the S&P 500. We've seen leadership changing. So if you think about some of the policies that could potentially favor the small caps, mid caps, smaller companies, which have really lagged for a decade, potentially having that opportunity. But that's a broader market rally. I do think monetary policy is going to be one of the key factors behind it.
You're talking about index makeup, and I can't let you go without talking about Nvidia and the Dow.
Yes.
Two of Guy's favorite topics. I'm curious about that, what that does, though, to the appetite around this. If you put Nvidia in the Dow or in any other index that's creation, is that better or is that worse? And I ask this in the context of liquidity. I ask this in the context of exposure. What do you make of it?
Well, if you look, the S&P 500 has, multiple times more assets benchmarked or, in some investable product compared to the Dow. The Dow has an incredible historical basis, 128 years old. It was effectively a barometer back in the late 19th century when you didn't have government statistics or other kind of financial market statistics. It was Charles Dow, the founder, just tried to get a barometer of the whole U.S. economy. So it has a historical precedence for us, but those 30 stocks, it's a much smaller universe compared to where you have kind of the S&P 500, but still, as a bellwether, being able to have the leading companies that are listed in the United States represented in that smaller index, clearly price-weighted, the stock price-weighted, not based on kind of market cap.
Yeah.
So I think it's there, but in terms of the bellwether barometer for U.S. equities, large cap equities, it's by far the S&P 500.
Well, there was a moment in history when Intel was the biggest player in the Dow, and for Nvidia to now replace Intel, I thought was quite significant. But I asked this in the context of critics of Nvidia who would say that this is a temporary rally, and that even though we are talking about this broader kind of AI spread in our everyday lives, we're not quite there yet. And so much of this, for Nvidia's perspective, and I'm aware you can't speak to specific stocks, is really a function of just the hyperscalers, and that's the read-through, as opposed to Nvidia being almost a stalwart or a pillar of kind of corporate America. How do you view that? To the critics that say this rally has gone too far and the indexes are over-indexed to Nvidia, what is the better play, and is concentration risk really that much of a risk then?
Yeah, you said it initially. I'm not going to comment on individual stocks. That's not what we do, nor do we try to predict the market. What we try to do is have the Dow, which doesn't have as frequent rebalancing or additions or subtractions, say, versus, say, an S&P 500. It really does reflect the criteria we publish on our website. It's clear to everyone. But I think those leaders over a longer time period that, again, provide this barometer with this kind of more select subset of kind of the S&P 500. And that's what Nvidia does.
Dan, I'm wondering what innovation in the index space looks like right now. What are clients asking you for? What do you still need to provide for them so that they can prepare for what could be a really volatile time ahead with another Trump presidency? What's the focus when it comes to innovation on indexes?
Well, I would say it's not an innovation. It's been around for over a decade, but a simple, what we started our conversation was this concentration. A very simple way to diversify is to equal weight. So our S&P 500 equal weight index, again, which has been around and is outperforming, since that kind of mid-July time period that I mentioned earlier. It's simple, it's understandable, and that's where we're seeing. But beyond that, I would say we're seeing innovation in different areas. Wealth management, for example, personalization, Gen AI, as it works its way in, we have to prepare the underlying data that supports our indices for wealth managers, private bankers, and others who are now going to be thinking about building more customized portfolios. So it may start, with an S&P 500, for example, but from a tax perspective or from some other need that we all as investors have, this is the world we're moving into. So taking traditional indices as a basis, but having a much more personalized impact. You're also finding capital-intensive industries, banks, insurance companies who are managing their assets, for example, also finding they need to move quicker. They need to have Gen AI-ready data that they can then use to manage their own portfolios better and their capital better.
There's a perception at the moment that private markets are better than public markets. Why has that become the reality? And is there anything you can do, should do, will do to continue to push back on that?
Well, I would say, look, it's clear over the past 3 decades, you've had, for example, in the U.S., you now have less than half the number of publicly traded companies.
Yep.
Right? So we've seen and rise, with private markets. If you actually get to performance, it's difficult to say. The data, when you have something, in private equity that is predominantly a general partner, GP, and LP relationship, versus all the transparency, everything you see in public equities. And having the underlying data is not particularly robust in private markets. So therefore, being able to draw apple-to-apple comparisons, a lot of work, including investments we're making, are going in to make the data and the comparisons better, but we're still a ways off.
There is a perception coming into this that the Trump presidency is going to be lighter on regulation. Do you think public markets would benefit from lighter regulation?
I think, again, I mentioned sectors earlier, and I think, again, you're seeing that sector dispersion. Clearly, the bets of some sectors potentially could benefit, what you're saying, but others not. For example, we're seeing, again, using dispersion as an example, we've seen 119% dispersion, which is kind of a record level between a big underperforming sector like auto components. This is of our S&P 1500 composite, versus an outperforming, sector which is coming in. So now we're seeing this, this momentum trade, which has been on for a long time. The sector changes, are going to potentially benefit, but areas like, utilities, transmission, energy, potentially those areas that have been kind of highlighted as beneficiaries, versus others. Financials, steepening yield curve. We're now starting to see relative outperformance, since the July dates as well.
So one of the conversations here in the UK has been how pension funds can be enticed to invest in some of these British companies, but also just in the index broadly. And it feels like the FTSE 100 and other indexes, the makeup is at the core of that conversation. This is something you're familiar with.
Yes.
This is something that happens in the States in terms of kind of pension exposure. What advice would you give to the UK government, to the players involved that are trying to incentivize this?
Yeah, look, I think if you look what's happened historically since, the late, say, 2009, for example, on a global index, so our S&P World Index, for example, U.S. equities were less than 50% of that index. Today, the strong dollar, the momentum, the number of companies moving their listings to, U.S. exchanges, from abroad. Now, U.S. equities are over 60% of a world index like the S&P World. So you're seeing this momentum trade. Clearly, many believe that the dollar is going to continue to strengthen or at least stay as strong as it is. But the liquidity and price formation in U.S. equities is very strong.
So what is the UK missing on that?
Well,
what do they need?
I think, and not only that, but I'd say the ecosystem, not only in saying cash equities, but look at the derivative markets, futures, options. That price discovery is taking place in the United States. So I think this is where you can maybe a government pushing to try to get more buying or are you going to think about the pensioners who need the returns for retirement? Where can you find the value and look, particularly the relative valuations and things? It's hard to ignore kind of waiting, outside.
Dan, great to see you. Thanks for stopping by to see us. We really appreciate it. Dan Draper, CEO at S&P Dow Jones Indices. And a reminder, the Bloomberg LP, the parent company of Bloomberg News, competes with S&P Dow Jones Indices in providing data and information to the financial industry. Let's take a look at how some of these indices are doing this morning. Here in Europe, not much action. As you can see, the CAC is actually unchanged right now. 42 minutes into the session, we are going nowhere in France this morning. Elsewhere, it's hard to discern much action, but there's at least some. Basically, we're waiting for the next catalyst. We'll talk about that next. This is Bloomberg.
Don't forget the fact that for the European Union to keep open the global trade is a vital interest. Yeah. And so we will not close the doors to a protectionist way. There are a lot of unknowns. What is clear to me is that the impact would be for both economies, both Europe and US. And this is a more reason, an additional reason to consider these things not as a given, but to start a conversation and cooperation, and this is what the European Commission will do with the new administration.
That was the EU Economy Commissioner, Paolo Gentiloni, speaking there about the potential impact of tariffs on Europe in an interview with Bloomberg that happened at the end of last week. Now, the topic of global trade is set to appear high on the agenda at the G20 summit in Rio de Janeiro. World leaders are expected to show unity on climate action and global trade rules, two areas threatened by US President-elect Donald Trump. Bloomberg's David Gura has more from Rio.
On the formal agenda for this G20 Leaders Summit are debates about climate change and sustainability, global trade and development financing. But there will also be some hard conversations about conflicts around the world, including those in the Middle East and Ukraine. Russia's President Vladimir Putin declined to come to this week's summit, and Vladimir Zelensky, the president of Ukraine, wasn't invited to attend. This summit comes at a time when the winds are starting to change when it comes to geopolitics and the global economy. And the G20 Leaders Summit comes on the heels of another gathering of world leaders in Lima, Peru, the APEC summit. While he was there, President Biden sat down with his Chinese counterpart Xi Jinping for a one-on-one meeting.
We haven't always agreed, but our conversations have always been candid and always been frank. We have never kidded one another. We've been level with one another. And I think that's vital.
Those two leaders last spoke in April by phone, and President Biden used this opportunity to stress how much the relationship has improved since he's been in office. There's now open communication between Washington and Beijing after 4 frosty years when Donald Trump was in the White House. Of course, Trump is heading back into power in the United States, and the uncertainty about what that means loomed large over that summit in Peru, just as it looms large over this one here in Rio de Janeiro. President Xi stressed that it's in both nations' interest for there to be a good relationship between the U.S. and China, but he said China would not be afraid to fight back if the U.S. crossed red lines. In Rio de Janeiro, David Gura, Bloomberg News.
Staying with trade, in the face of another Trump presidency, you might expect to see European countries trying to fast-track ongoing trade talks with other regions. But that might not be the case. In Europe, France is hoping to persuade Poland to join it in blocking a trade deal between the EU and Latin America's Mercosur bloc. Let's bring in Antonio Barroso, who's a senior geoeconomics analyst at Bloomberg Economics, who can think about how trade is being reshaped by the prospect of another Trump presidency. So thinking about this specific deal, so this is ongoing between Europe and parts of Latin America then. Why is this deal important for the EU?
So this deal is not so important from an economic standpoint. We have crunched the numbers, we did the modeling, and there will be moderate gains for the EU, but as a whole on the aggregate, it's not so economically important. But it is important from a geopolitical standpoint for 2 reasons. First, the EU needs to show that it can pursue free trade. right now there are tensions on the Eastern Front with the tariffs on electric vehicles coming from China. So you have some tensions, some frictions there. And soon you might have a trade war starting with the United States due to the election of Donald Trump to the U.S. presidency. So as I said, the EU needs to show that it can pursue free trade. And the second reason is that China is increasing its footprint in Latin America. It's a region that is rich in critical minerals that the EU needs to diversify away from countries such as China. So, as I said, from an economic standpoint, not much to gain, a little bit to gain, but the deal has a lot of political importance.
Well, talk to us about that political importance, specifically why the French are trying to block it. Connect the dots for us.
Well, I mean, I have one word for you, and that is farmers. That's the main reason why France is trying to block the deal. Actually, when you look at opinion polls in France, half of the French people don't know what the Mercosur-EU trade deal is. It's like foreign policy issues. People normally don't care about these topics on their daily lives. However, farmers do care. They are a constituency that mobilizes very strongly, that is able to put the tractors on the streets and paralyze roads and create a big headache for the government. Farmers particularly are complaining about one category of product, beef, because if you look at the modeling, actually some of the farmers will be probably able to benefit from the deal. But particularly in the case of beef, it allows for a higher number of imports of high-quality beef, which might hurt French farmers particularly, and that's why farmers are very unhappy about this deal, and that's why the French government, French President Emmanuel Macron and Prime Minister Barnier are mobilizing strongly and trying to build a coalition against the deal in the EU.
Antonio, great stuff. Thank you very much indeed. Antonio Barroso joining us from Bloomberg Economics out of Geneva. Interesting to see how the UK and the EU deal with the Trump presidency and whether or not it forces them further together. Let's talk about what's happening in Germany. German Chancellor Olaf Scholz has urged the Russian President Vladimir Putin to speak with Ukraine. On Friday, the two leaders held their first phone conversation in nearly 2 years. Let's get more from Bloomberg's Oliver Crook, joining us out of Berlin. What do we know about this call? What was said?
Yeah, well, I mean, this was sort of out of the blue, I think, for many people to hear Olaf Scholz sort of breaking silence with Vladimir Putin. We reported this story on Friday before anybody else when we got wind that this conversation was going to happen. And it really seems to be very sort of odd timing, particularly since Olaf Scholz is not in, as we've been talking about for several weeks and months, frankly, not in a particularly strong position right now. So he spoke on the phone with Vladimir Putin for an hour. We understand from people familiar with the matter that they will keep an open sort of chain of communication. And again, this breaks a silence of, about 2 years for Olaf Scholz, and is really, I think, the only G7 leader to speak to Vladimir Putin any sort of time recently. There hasn't been a huge amount of blowback from some of the key allies, say the United States, the UK, and France, because allegedly Olaf Scholz sort of had given them a warning that he had the intention of doing this. Of course, Volodymyr Zelensky, it's a very different picture, who said that this is basically opening Pandora's box now, bringing sort of Putin into the fray. But it sort of speaks to, I think, the broader problem that you have here in Europe, confronting this idea of the Trump presidency coming up, that basically if they do not re-engage with Putin, this line that they have continuously said, no agreement on Ukraine without Ukraine. But if it's just Putin and Trump, there could be an agreement on Ukraine without Europe. So potentially now somebody to go forward and start to sort of feel the temperature from Vladimir Putin. To me, it's not exactly clear why Olaf Scholz is the right person to do this, given his particularly weak position and given the fact that he may not be chancellor for very much longer.
Yes, in the midst of all of that global geopolitics then, Ollie, we watched the domestic story in Germany unfold. Support for Scholz seems to be dwindling there, with the Greens picking Economy Minister Robert Habeck to lead them into the February election. Where does that leave Scholz?
Yeah, so Robert Habeck over the weekend got, 97% support of his party to lead him into the next election. We are starting to have some doubts from the SPD about whether Olaf Scholz is the right candidate going forward. Right now, within the SPD, if you're looking at this election on February 23rd, you're thinking to yourself, we have Olaf Scholz. Yes, he is the incumbent. Yes, he is the chancellor. Yes, he has been the leader for the last few years, but he is supremely unpopular. You also have in your party Boris Pistorius, the defense minister, who is not only the most sort of popular politician within the SPD, he is the most popular politician within Germany. This is a sort of title that is quite coveted when you go into a major election. Now, the SPD is going to officially put their official candidate forward on January the 11th. But as you can see from the polling, not within the party, but across Germany, 66% of people believe that Boris Pistorius should be leading the SPD into this election, while only 18% think that it should be Olaf Scholz. All that being said, the SPD currently still has closed the ranks, is supporting Olaf Scholz, though as we know in politics, particularly the last couple of weeks, if January 11th is some time away, and there is definitely a non-zero chance that Olaf Scholz will not be the candidate going in, though he still enjoys the support of the SPD right now.
All right, Oliver Crook, we thank you so much. Of course, walking us through some of the German politics, some of the key players that we are keeping an eye on. In the meantime, let's talk about what we are going to be keeping an eye on in the week ahead. Of course, the G20 does begin in Brazil, in Rio, I should say. But it really kicks off the week of strong data, strong earnings on both sides of the Atlantic. We got Walmart earnings on Tuesday, Nvidia on Wednesday, which is largely expected to be kind of the highlight of the week. But then plenty of data as well. Jobless claims, PMIs from the EU, UK, US. You take your pick. It's happening this week.
One thing that's not on there. Treasury Secretary. When are we going to get that news?
We couldn't attach a day to it,
No,
so it doesn't work in the graphic.
Yeah.
It hangs over the whole week, doesn't it?
It does.
The beginning
and the market,
of it, perhaps.
The market's on tenterhooks waiting to find out who it's going to be. So will that be something that eclipses all of what is on the screen at the moment, or do other factors such as the survey data that we're going to get this week, or those Nvidia numbers or Walmart numbers, maybe eclipse that too? The market's certainly still got a firm focus on Trump.
It's just difficult to see CPI data, growth expectations, that sort of thing cutting through when we still don't. There's still so much about the Trump agenda that we really don't know. Those seem like the huge, big uncertainties that still hang over markets. It seems difficult to get excited by backward-looking data around prices, for example.
We just don't know what the tariff policy is going to look like.
Can I make a contrarian pitch,
Sure.
which is, will we know what the tariff policy looks like after we get this pick? Will we get any actual real guidance, or is this just one of those things that the market is focusing in on, but ultimately nothing changes?
It was a couple of years, wasn't it, but during the first Trump administration, before we got real clarity on what tariffs were going to look like, and that might not be a good guide.
But that was what Trump felt. He was frustrated in the last presidency because he didn't have his team in place, couldn't get off the ground quickly, didn't go for what he wanted to go for as quickly as he had hoped for. The expectation, look at what we're doing in terms of already filling positions, that they will hit the ground running and deliver quickly, and that certainly seems to be the hope and expectation coming out of the incoming White House team.
In amongst all of that, the market watches reevaluate Fed expectations as a result. And with that in mind, coming up later today, don't miss our interview with the former St. Louis Fed President, Jim Bullard. That conversation at 1:30 p.m. at UK time. A lot to talk about when it comes to shifting expectations about just how many cuts we will get from the Fed. Just where is the neutral rate and how close are we to it? That is it for the opening trade. The week gets busier from here, folks, that's for sure. The S&P the Stock 600, down 0.1% this morning. This is Bloomberg.